Welcome back. Well, Justdial's numbers were better simply because the margins improved in third quarter and other expenses decreased. Revenue growth was still muted if looked at it on a sequential basis. Abhishek Bansal, CFO Justdial, is joining in with more details. Well, Abhishek, good morning. Thank you very much for joining us. Margins, a big highlight in third quarter. What explained that performance and what's the outlook on margins?
This particular quarter saw healthy EBITDA growth. So we had about 80% year-on-year EBITDA growth. Employee benefit expense, which is our biggest cost item, last year full year was about 440 crores. This particular line item should ideally have grown at say 8-9% in line with the inflation trends. But with automation efforts, etc., we have been able to curtail that, and we should close the year at a reasonably lower amount compared to last full year. Other expenses, again, we have been able to optimize a lot on other expenses. So this year, during the first 3 quarters, we have delivered 120 crores of EBITDA versus 110 crores for last full year. And this is despite 45 crores of additional advertising spend. In terms of outlook, as I see, the blended about 20 to 23% adjusted EBITDA margin for first 3 quarters, I think we should be able to sustain that going forward even at current revenue growth levels. If revenue growth were to accelerate, I think operating leverage should help in expanding margins further.
So your revenue growth is a function of realizations and your campaigns as well. What's the outlook as far as campaign growth is concerned, given that the realizations have been pretty steady?
See, revenue growth, which was about 9.2% year-on-year this quarter, was highest in last about 4-5 quarters. So as you pointed out, that revenue growth is a function of campaigns as well as realizations. Realizations which were on a structural decline due to growing penetration in tier 2, tier 3 cities, we have been able to pull realizations back. So this quarter saw 5-6% year-on-year growth in realizations. Ideally, for a company, yes, both campaigns and realization should grow, but considering we have focused on consolidating our business, getting efficiencies and productivity back over last 3-4 quarters, which is playing out, so far realizations has actually helped revenue growth. Going forward, based on whatever steps that we are taking, I think campaigns should also grow.
Okay, by the way, just take a look at ADAG names. All of a sudden, there's a big surge happening in the stock, led by Reliance Naval. That stock is up about 5%. Reliance Capital, Reliance Infra, Reliance Power, and there's big buying in Reliance Communications as well. So, big move right now happening in the ADAG pack. So, let's see how that one turns out. But Abhishek, good morning. What's the outlook on sustainability of price hikes?
See, when we launched our advertising campaign, we took price hikes on some of our entry-level products. So last 3 quarters, we have seen that those particular price hikes we have been able to sustain. But obviously, price hikes can be taken only to a certain level. So far, they have been sustainable. Going forward, as we expand our particular sales teams, etc., and focus on penetrating more into tier 2, tier 3 cities, it should result into higher signups. So a combination of more signups and realizations both should help boost revenues.
Okay. JD Omni was one of the key monitorables for the company. Can you give us more updates on this product?
As part of JD Omni, we realized that SMEs valued having a good mobile-friendly, transaction-enabled website for their business. So we have brought in capabilities where we can create websites for SMEs in a matter of just few hours itself. So as part of Omni, it's the websites that we are providing to these SMEs. Websites could be sold as a standalone or a bundled product. So those websites are seeing good traction.
Can you throw some color on the spends that you will be making for advertising and the outlook on the same? Because, you know, the environment has become so competitive now.
See, first 3 quarters, we spent about 55 odd crores on advertising. As a business, we are clear that this particular business needs a sustained level of advertising in this particular digital era to stay in users' minds. We do intend to spend about, say, 8-9% of our top line into advertising, so could be anywhere between say 80-85 crores. Every quarter we keep analyzing what portion of our advertising spend should go into digital versus non-digital mediums. Whatever gives best return on investment, that is how we try to optimize our ad spends.
Okay, in the past there have been some reports, you have denied them of course, but you know, about Google and few other companies looking to acquire or invest in Justdial. Any clarifications on that?
See, it is difficult to comment on any such market rumors, so such news keeps surfacing from time to time. As a business, as we continue to focus on growing usage of our product, healthily growing our particular cash reserves, which stand at about 1,085 crores. We do keep interacting with several large corporates as part of our regular business tie-ups. In case there is any strategic tie-up and there are discussions worth disclosing, we would be the first ones to report.
Okay, thanks for that. We will come back to you for more on that. But for now, thanks for joining in. That's Justdial. Still very, very paltry revenue growth of just about 1%, but margins have improved this time around. But on a quick programming note, ahead of the union budget and more